Okay, welcome everyone. It is 2:21 Pacific Standard Time. It is Friday. Let's take a look at the date here. Okay. All right. So it's Friday, March 27th, 2020. I almost said 2021, but it's 2:21 p.m. Pacific Standard Time. All right. So that means the market is closed. The markets are closed. The Forex market. The only market that's open is the cryptocurrency market, guys, which is kind of cool because you can do aftermarket trading. You know, um, I don't know, but I don't trade cryptocurrencies aftermarket. I used to, and I learned don't do that. You can make money during the weekend with cryptocurrency, but it's me personally. The weekends, I mean, I, I I love when the weekends come because it's a break away from the market. I don't want to be on the market 24 hours a day. No way. The market is not my life. Okay, it's one aspect of my life, but it is not the definition of my life. you know. So, and that's one of the reasons why, I developed this strategy because current market value, okay, both of these strategies, current market value and current market movement. Current market value is for long term, current market movement is the short term aspect of the Forex helper strategy. Okay. But they both have their pros and cons. Okay. Now, the pro side of the current market value is it has a very high percentage of success rate. And another pro is it's designed for long term. So those of you who are extremely busy, I mean extremely busy, and just don't really have the time to really sit in front of a computer all day, current market value will be great for you. And within 20 to 30 days, on average, you collect your profits. I just finished making a video about current market value. We just collected on March 23rd. All right. We collected a little earlier than usual, but hey, still, all right, about 2 million bits in Bitcoin. All right. So, but before it reached that point of the end of the month, oh man, I had to go through it. If I were to show you what it had to go through, okay, so we just placed a new current market value trades. Let me show you guys this, okay? Some of you guys are probably going to freak out. See, this is the freak out. This is like the shock value of current market value, all right? Here's the con, or the other side, okay, the pros and cons, The bad part about current market value is, okay, on both of these strategies, you have two phases. You have the drawdown phase and you have profit phase. Okay. So when you're going through the drawdown phase with current market value, sometimes it can last about a week or two within that whole month time frame that you're waiting. So that means you're going to have to sometimes see red for about a week or two. And that's the bad part of the strategy because it really tests your emotions, okay? And where's our current market value account? And you look at this, you look at our current market value account, you're probably gonna think I'm nuts or I'm crazy. If you look at it, here it is. Okay, so this is a real account, current market value. It's here. All right, so it's down almost 2 million bits because we just placed these trades. Current market value, guys. And you're looking at this like, oh my goodness, is he serious? Yeah. Well, that's the shock value of current market value. These trades have just been placed on the 24th or something like that. So they're not even, well, today's the 27th, And when I count days, I count market days. All right? I'm not talking about 20, 30 days counting the the weekend, of course not. And I'm not even counting Friday as a full day and Sunday as a full day, because they're not a full market day. Although the market starts when on Sunday Pacific Standard Time at 2 p.m., but that's not a complete day. From 2 p.m. to midnight, it's not a complete 24 hours. So I combine Sunday when it opens at 2 p.m. and then here Friday it closes at 2. So again, I combine Friday and Sunday together to make one complete day. Then you got Monday, which is going to be 2 days, Tuesday 3, Wednesday 4, okay, and Thursday 5. Okay, so Sunday and Friday, that's 1. Then it's Monday, Tuesday, Wednesday, and Thursday. All right, so that's it. That's all you get. And then after that, so 20 to 30 days, you got to wait, quite a while. But if you have the patience, and that's more of a higher standard of waiting, especially if you're new to this, or you got a lot of things you got to overcome, which we all do. All right, especially if you're starting off. So, and that's one of the so those are the benefits, and those are the advantages and disadvantages of the current market value. And really, with any strategy you do, you're gonna kind of have those two principles. You can't escape it. It's not. You can't have this mindset where you're trying to, think that everything's going to be a fairy tale, a La La Land, a Disneyland, like everything's going to be peaches and cream and a picnic. That's just not realistic, okay? That's just not how the market works. So you can't enter the market with that kind of mindset, because if you do, you already set yourself up to fail off the bat. You got to accept the market for what it is. You got to accept the volatility. You got to accept the wait time. You got to accept the drawdowns. You got to accept the profits. It's easy to accept the profits, but you got to, all these things, you got to accept it for what it is. That's just what it is. Okay? That's just what it is. All right? You can't say one day, I'm tired of, I don't like to see the sun rise, and I don't want the sunshine. So what? It's gonna rise. The sun's gonna rise, gonna set, outside of how we feel about it. All right. There are certain things that we just have to accept. That's just what it is. Period. And that's what it is. Now, the good thing about current market movement and the disadvantages, the advantages and disadvantages of current market movement now. All right, I'm done with current market value. All right. Now, current market movement, the good thing about that is, with current market movement, let's go ahead and let's take a look at our current market movement account. All right. Now, with current market movement, okay, you see it. We're at 15,000 for the week. I forgot to even collect this. Okay, so Friday I can't collect it anymore because the market closed. See, if I try to close it, the market is closed. Okay, so the good thing about the current market movement is, as you can see, there's a complete difference between this one and this account and the other account I just showed you. The other account I just showed you is at its starting phase. It's at its seedling phase. It's a seed. Keep that in mind. I talk about this in my ebook, and I always talk about it. I'll continue to talk about it because you got to get that concept in your mind so that you can start exercising patience. All right? So it's like a seed. You plant that seed, but with current market movement, the difference is you got at least a week's time on average, okay? Between 2 to 4 days out of that 5 trading days that I gave you, okay? Between 2 to 4 days, okay? But on average, maybe 2 to 3, all right? You're pushing it if you're going to go to 5, all right? That's why we collect on Thursdays, okay? So Tuesdays we'll place the trade, sometimes on Mondays. It just really depends. It has to be analyzed first. But the best time, Tuesdays. And some of you may say, well, I just lost out on on a Sunday and a Monday trade. Well, listen, those are not really the best times to really place your trades on average. You're going to be better off placing it on a Tuesday than you would on a Sunday and Monday on average. Now, there are times when there's an exception. All right, there are times, but on average, you're better off placing it just waiting. Now, it's going to help you on the other part of our human emotion, to kind of, again, more patience, and just accept what you get as your profit when that time comes, and you're going to be better off on average, okay? And then on Thursday, so Tuesday we place the trades. Thursday we collect. Well, how come they don't do it on Friday? Well, on average, Fridays are like really the most volatile days on average, especially with current market movement. You got a whole, especially if a report's coming out, just, again, might as well start your weekend early on a Friday. All right? You don't gotta, make it this your whole, don't let it consume you. All right? Don't let this thing consume you, because it can and it will if you allow it to. I'll talk about that on another video. But so the advantage for current market movement is you're able to make your profit every week. All right, that's a good thing. But the disadvantage to current market movement is the amount of times your trade can be affected within that short time frame of a week, believe it or not. There's an average of at least 3 to 4 times on average that your trade can be affected, meaning that it can switch positions. You will be going one way and the market said, nope, we're going a different way. We just changed our mind again. That can happen at least 3 to 4 times. Now, we've done some things to circumvent that, and that's all of that plays a part in this Forex helper strategy. I've noticed that when I trade, there's a variety. Okay, not everything here is in profit. You can see that off the bat. Some of these are some huge losses, but that's why you have to diversify. You have to. That's going to circumvent that. Imagine if, let's see, we got this euro try that's negative 68. Imagine if you just took all that. Oh my goodness, you're gonna lose. You're not gonna feel too good. All right, so you got to diversify. That's gonna help circumvent that, and then that's one of the ways to circumvent that part, at least. That type of reaction to the market, the switching around that this has quite a bit. Okay. And it does it at different market hours. So sometimes it'll do it when the Australian market opens. And then goes into the Asian market. It'll start doing it there with certain pairs and certain assets. And when the US market opens, oh my goodness, there's no telling what it's going to do, okay? And another way we help circumvent that is I help absorb a lot of that, believe it or not, because the disadvantage of this strategy is, remember, the smaller the window, the more attention your investment requires of you. The more time is going to require of you. Remember with CMV, you can kind of leave it there and go about your business for 30 days. You might be somewhere, I don't know, somewhere where you don't have access to a computer for 30 days. You come back in 30 days, CMV is going to be good. But not with CMM. You can't do that. Okay? You're going to have to devote some time during that week. You're going to have to. And the diversity is going to help circumvent, so that way you can at least not be a slave to the market and having to just be glued in front of your computer or your cell phone or your device or whatever you're using. No way. Because you're gonna need rest. You're gonna have to have a peace of mind. You're gonna have to. No, that's not gonna be healthy either. So you see how that all of that kind of levels out. It levels everything out. And then, so that's one of the disadvantages. It's going to require more of your attention, more of your time. All right? And remember, at the end of the week, you're not going to have a perfect situation take place. You're not going to have a perfect situation take place, but you will have profit at the end of the week. You will have profit at the end of the week. It's better than having a loss. It's better than having a blown account. For those of you who don't know what that means, when you blow your account, when you lose everything. I made a video about how not to blow your account. And I covered that in the book, in the ebook, Easy Forex Trading. Keep your margin level percent at a certain level. And you have nothing to worry about. That should be like that's the elementary level of understanding how the strategy works. That shouldn't even be a fear anymore. You could keep your margin level percent near 1,000, above 1,000 for up until kingdom come. You could trade as much. You could make several mistakes, but at least you have something, an opportunity every day or every week if you keep your margin level percent there. But if you don't, oh, guess what? You're back to square one, ground zero. You're back to building up from scratch. And for some of you, that means having to go probably get money from somewhere else to just put into your account. You don't want to go through that. So that's the very first lesson. Margin level percent, just keep it around. That'll help control your greed, the greedy part of us. Why go any further? Oh, because I know I could. They're giving me a leverage and I want to maximize it. Okay. You do that, then you fall right into the broker's trap. You'll fall right into the trap that 98% of the people who get into this fall into. Every single time. Just because they give you leverage and make your money worth more than what it is doesn't mean you have to take all of it and use all of it. Just use a small percentage of it. It's still going to get you somewhere. Say, well, I could have made $80 instead of $8. Okay. All right. Next time you'll get an opportunity to get that 80, but start building your account up to that point where you're going to be able to do that. That's better than losing 80 and losing your whole account. You make $8 instead of the 100 you could have made. But what's better? Is it better to make the $8 for the week or lose your whole account of $1,000? Huh? Because you wanted to maximize your leverage down to the final iota and ended up losing your pants and everything else. Really? Was it worth it? I would have been better off making $8 for the week than losing $1,000 and having to scratch up $1,000 from somewhere. Okay? So that's the very first lesson. I'm going to go ahead and make another video because that's not even what I really wanted to talk about. I'm going to go through these accounts. But I'm happy I talked about this because it's very important for you all to understand the advantages and the disadvantages of current market movement. So to summarize everything, current market value, current market movement. Current market value is the long-term aspect of the Forex helper strategy. Current market movement is the short-term aspect of the Forex helper strategy. Current market movement, the advantage of that is it is long-term 98% success rate. Okay. So after 20, 30 days, 90% of the time, you will find some profit in your account. All right. The disadvantage of it is there's long phases of drawdown phase, so it could mess with you emotionally. That's if you allow it. Okay. That's another topic. All right. That's about being a wise investor. All right. Now, current market movement. The advantage of that is you can make your profit every week. But the disadvantage of that is it requires more of your attention, more of your time to focus on the market. And I talked about how we circumvent that. And I also talked about two ways we circumvent that is by diversifying your account, your portfolio. All right. And then also keeping your margin level percent at a safe place. You do that. And then the third thing is experience of doing these things. Oh my goodness. You're finally free from the whole shackle, the emotional, psychological shackle that the markets put on you if you allow it to. And 98% of the people, read the ebook I talk about, that are in that sad state of mind. You're free from it now. Free from it. This is Gabriel, the Forex Helper. Happy trading. Happy investing.